morning. My name is Alexander Yemelyanov, and I am professor of computer science at Georgia Southwestern State University. Today I will present our work AI-assisted cognitive behavioral decision support for insurance coverage selection, conducted in collaboration with David Adeogun and Rahul Sukumaran. This research explores how artificial intelligence, self-regulation theory, and behavioral decision-making principles can be integrated to support insurance coverage selection under conditions of risk and uncertainty. Selecting an appropriate level of insurance coverage is a complex decision problem. Individuals must evaluate uncertain risks, assess probabilistic outcomes, estimate potential financial losses, and balance protection against cost. Existing insurance comparison tools primarily focus on premium and provider comparisons, as well as quote generation. While these tools help users identify lower-cost options, they generally assume that users already know the level of coverage they need. Consequently, determining the appropriate level of coverage is often left to the individual. Our research addresses this gap through ED2 Insurance Choice, an AI-assisted cognitive behavioral decision support system that helps users identify a level of coverage that sufficiently reduces financial risk relative to their risk profile before comparing providers and premiums. Traditional insurance theory assumes that individuals can accurately assess probabilities, evaluate uncertain outcomes, and select the coverage alternative that maximizes expected utility. Under this perspective, insurance coverage selection is viewed as an optimization problem. However, research in behavioral economics and cognitive psychology suggests that real-world insurance decisions really follow this idealized model. In practice, coverage selection is influenced by limited information processing capacity, incomplete risk perception, behavioral biases, heuristic, and motivational factors. Rather than conducting comprehensive analysis, individuals often rely on simplified judgment strategies when evaluating insurance alternatives. Several well-documented behavioral effects contribute to this process. Individuals frequently misperceive probabilities, underestimate their personal exposure to risk, exhibit loss aversion when weighing costs and benefits, and prioritize short-term consideration over long-term protection. These findings suggest that insurance coverage selection is not purely an optimization problem, instead is a cognitively constrained and behaviorally influenced process. To better understand this process, the next slide presents the theoretical foundations underlying our approach. First, Simon's theory of bounded rationality suggests that the individuals seek acceptable rather than the optimal solution under conditions of uncertainty. In this insurance context, people typically look for coverage that is good enough, rather than mathematically optimal. This idea is captured by the concept of satisficing, derived from the satisfy suffice, indicating that a solution must both meet relevant goals and exceed a minimum threshold of acceptability. Second, decisions depend on mental model of risk. Individuals use internal representation of risk to anticipate consequences and evaluate alternatives. When these mental models are incomplete or distorted, insurance decisions may become less effective. Third, systemic structural activity theory explains that problem solving involves both cognitive and motivational components. The goal represents the cognitive component, while motivation provides the energy required to achieve the goal. Building on this foundation, self-regulation theory explains how individuals continuously regulate cognition, motivation, and behavior during goal pursuit. Within this process, self-efficacy plays a central role. Self-regulatory efficacy strengthens commitment to achieving the goal, while coping self-efficacy increases confidence in overcoming anticipated difficulties. Together, these theories characterize insurance coverage selection as a self-regulating risk reduction process under uncertainty and provide the theoretical foundation for the self-regulation model of problem solving presented in the next slide. This slide presents the self-regulation model of problem solving that serves as a conceptual foundation of ED2 Insurance Choice. In this framework, insurance coverage selection is viewed as a self-regulation satisficing process in which cognitive evaluation and motivational regulation operate simultaneously under conditions of uncertainty. The model organized around two goals. The problem goal is to achieve sufficiently risk reduction. An activity goal is to receive benefits and financial support in the event of the covered loss. The activity goal first separates outcomes into successful and unsuccessful outcomes. Successful outcomes occur when a loss event happens and the insurance policy provides financial support. Unsuccessful outcomes occur when the loss event doesn't happen and premiums are paid without receiving benefits. Each outcome is then evaluated from the both cognitive and motivational perspectives. Cognitively, successful outcomes produce reduced risk, while unsuccessful outcomes produces residual risk. Motivationally, successful outcomes are associated with the difficulty, reflecting challenges involved in implementing the selected alternatives, whereas unsuccessful outcomes are associated with significance, reflecting the importance of achieving the problem goal. Self-efficacy regulates these likelihoods by influencing confidence in achieving desired outcomes and overcoming anticipating challenges. Self-regulatory efficacy increases positive likelihood by reinforcing confidence in sustaining goal-directed effort, whereas copying self-efficacy decreases negative likelihood by strengthening confidence in overcoming potential difficulties. These cognitive and motivational evaluations are combined to determine the overall satisficing level of an alternative. As a result, the model integrates risk reduction, motivation, and self-efficacy into a unifying framework for determining whether the covered alternative provides sufficient protection under uncertainty. Based on self-regulation framework, we develop ED2 Insurance Choice, an AI-assisted cognitive behavioral decision support system. The primary objective of the system is to help users identify insurance coverage level that sufficiently reduces financial risk relative to their risk profile. The system currently supports multiple domains, including auto, home, health, life, business, cyber, and reputation insurance. Rather than focusing immediately on premiums and provider comparisons, the system first helps users evaluate coverage alternatives such as basic, standard, and comprehensive. Using Azure OpenAI, the system generates both cognitive outcomes such as risk reduction and residual risk, and motivation outcomes such as difficulty and significance. It also provides confidence level, solution for anticipated difficulties, and strategies that support goal attainment. In this way, ED2 Insurance Choice assists users in identifying a satisfying level of coverage before they begin comparing insurance providers. This slide presents the architecture of ED2 Insurance Choice. The system consists of three interacting components: the user, the express decision framework, and the Azure OpenAI. The user provides a profile describing the following characteristics: personal, contextual, behavioral, evaluates AI-generated outcomes, applies self-efficacy judgment, and ultimately determines the appropriate level of coverage. The express decision framework serves as a central coordination component. It includes prompt engineering, which transforms the user profile into structured prompts, result aggregation, which implements the self-regulation model and computes satisficing evaluation, and decision-making guidance, which help users identify the coverage alternative that reaches a satisfying level. To improve reliability, the system incorporates a consistency engine that maintains stable risk estimates across operational modes and hallucination card that validates AI-generated responses against domain constraints. Together, these components create an integrated AI-assisting decision support environment for insurance coverage selection. Azure OpenAI generates personalized cognitive outcomes, including risk reduction and residual risk, as well as motivation outcomes such as difficulty and significance, each categorized as material, physical, psychological, social, and spiritual. It also provides solutions for mitigating anticipating difficulties and strategy for supporting goal attainment. These responses are generated using GPT-based large language models provided through Azure OpenAI APIs. This contextual information is transformed with each subsequent request, enabling responses that remain logically aligned with early evaluation and preserve continuity throughout the decision process. To illustrate the proposed framework, let us discuss an auto insurance coverage selection problem. The problem goal is to sufficiently reduce the risk of financial loss, while the activity goal is to receive financial support in the event of covered loss. In this example, the user owns a vehicle of moderate value, drives in a relatively high-risk environment, has moderate financial capacity, exhibits a high tolerance for risk, prefers cost-conscious decisions, and typically relies on advice when making insurance choices. Based on this profile, ED2 evaluates this coverage alternative: basic, standards, and comprehensive. Unlike traditional insurance comparison tool, which primarily focus on premiums and providers, the system evaluates each alternative using both cognitive and motivational assessments. By integrating these assessments, the system identifies the coverage alternative that reaches the user satisfaction level. That's the level of protection that sufficiently reduces financial risk while remaining consistent with the user goals, preferences, and capacities. Based on this profile, the system generates cognitive risk outcomes for 3 coverage levels. These outcomes reflect the estimated reduction in financial risk and the remaining risk associated with each coverage option. The baseline risk is estimated at 12%, representing the annual probability of significant out-of-pocket loss if uninsured. The estimated relative risk reduction is 35% for basic coverage, 70% for standard coverage, and 90% for comprehensive coverage. The resulting cognitive risk outcomes and associated confidence level are presented in the table. So, from the pure cognitive perspective, comprehensive coverage provides the greatest protection. However, cognitive evaluation alone does not determine which alternative becomes satisfying. When cognitive differences in risk reduction are estimated, motivational regulation determines how the coverage alternatives are evaluated in relation to the user's goal and capabilities. Motivational outcomes reflect the importance of achieving the problem goal and the challenges associated with implementing the activity goal. The table summarizes the key motivational factors for each coverage option, highlighting the primary sources of difficulty and significance together with a corresponding solution and strategies. Self-efficacy regulates the evaluation process. Self-regulatory efficacy increases the perceived significance of achieving the goal, thereby strengthening positive motivation or suffice plus, whereas capping self-efficacy reduces the perceived likelihood of anticipating difficulty, thereby weakening negative motivation or suffice minus. This slide illustrates one of the most important applications of the proposed framework. Even when individuals have the same risk profile, they may arrive at a different satisfying coverage selection because they differ in self-efficacy. When self-regulatory efficacy is moderate and capping self-efficacy is high, basic coverage may be considered sufficient because the individual is comfortable managing potential difficulties and values premium saving. As self-regulatory efficacy increases, individuals place greater importance on the achieving risk reduction goals. In this situation, standard coverage often becomes a satisfying alternative because it provides a balance between protection and cost. When both self-regulatory and cooperative self-efficacy are strong, comprehensive coverage may become satisfying because the highest premium is viewed as an acceptable investment in long-term financial protection. This result demonstrates that insurance coverage selection cannot be explained solely by cognitive evaluation of risk reduction. Motivational regulation and self-efficacy play a critical role in determining which alternative ultimately reach the satisfying level. In conclusion, this research introduces an AI-assisted cognitive behavioral framework for insurance coverage selection grounded in bounded rationality in self-regulation theory. The proposed approach views insurance coverage selection as a self-regulating risk reduction process in which cognitive evaluation and motivational regulation jointly influence whether a coverage alternative becomes satisfying. Integrating these theoretical insights, we developed ED2 Insurance Choice, which combined risk reduction, motivational regulation, self-efficacy, and AI-assisted guidance within a unified decision support framework. Overall, the result indicates that integrating AI-generating cognitive and motivational guidance can improve transparency in risk evaluation, strengthen user engagement in the decision process, and support more informed selection of insurance coverage under condition of uncertainty. Future research will focus on empirical evaluation with users and extending the framework to additional risk management domains. Thank you for your attendance. I will be happy to answer any questions and discuss this research further.